Hey, I'm John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be talking about how to create retirement income in the safest and most consistent way. So if you are close to retirement, maybe you're already retired, and you're looking for a more safer strategy than maybe the stock market or maybe the 4% safe withdrawal rule that your advisor might be telling you about, which of course has been debunked several times, and now it's more like 2 or 3%. But you're thinking, man, I really need more income than 2 or 3% of my portfolio. But how can I safely withdraw without running out of money? Okay, how can I protect myself against market risk? What if 2008 happens again? Okay, what if 2020, when the stock market crashed during COVID? I mean, all these things happen, and it's not really a matter of if, it's just a matter of when. We know it will happen. It happens on a regular basis. It's normal. But when we're in retirement or we're close to it, that can really affect the time that we retire. You know, that you might want to retire in 6 months, and maybe if the stock market crashes, then you have to delay that for another year or two. You don't want to do that. Okay. Or if you're in retirement and the stock market crashes, it causes you maybe to stop taking income. That could hamper your lifestyle as well. So we're going to be talking about consistent and safe ways to be able to provide that for yourself. And of course, I'm going to talk about annuities as well as one of those components. That's not the only thing you can do, but I love annuities, and I show all annuities that are on the planet. So a lot of people, when they're looking for consistent, safe income, they will go to my website, johnstevenson.com, and they will check out my annuity calculators, and they will see what the payouts are there. So they're contractual, they're guaranteed, and that is, in my opinion, one of the best ways. And I will show that as well. I will share my screen, but I wanted to talk to you a little bit about the different ways, and you're probably aware of some of these, that you can create consistent income for yourself, and they're relatively safe. And I have lots of clients that will do these in conjunction with some of their annuity contracts as well. So one way to do that, I would say in a safe way, is through bonds. And of course, you're probably very familiar with bonds and how they work. They can be safe, but of course, the interest rate environment can cause fluctuations in your bond value, which can cause you to lose some money if you were to get out of that bond and the value is just not where it was before because interest rates rose. You know, that's happened to quite a few people over the last few years. So that is one way to do it, of course. I do like municipal bonds, but you have to be careful if you might invest into different munis in different districts, different states, cities that may charge you tax. You're going to be exempt from federal tax usually, but a lot of times if you want to get exempt from any type of state or local tax, then you got to do it at a local level in your own state. So you might be limited if your state doesn't give you as many options as maybe another state might give you. But that is a great way to create some consistent income, some tax-free income. But a lot of times it's a lot lower. The overall yield is lower than what you might get from a high-grade corporate bond. Corporate bonds are great because you can get higher yields. They're relatively safe. And you can get pretty consistent income from them, which is great, especially if you're wanting to kind of manage it more yourself, take a more active role. Those can be good as well. I do like dividend stocks. I'll be honest. I mean, I love annuities, but dividends are awesome. I mean, you look at Coca-Cola; they've paid it for decades, and they'll continue to pay it. And you know, it's not a huge payout. I think it's like 3%, but it is a payout that you can rely on. And there are other companies, some energy companies pay a lot more than that. Some of them pay like double that. And so that's a great way to take income. But the underlying value of your stock, your preferred stock, might go down. And so that could be a problem, especially if you want to liquidate that later on. And of course, they might decide not to declare a dividend, or they might decide to skip, or they might decide to just lower it. So there's a lot of problems that you can run into as well. Real estate, of course, is and can be consistent and safe. Just depends on the price that you buy the property, depends on the location, of course, and depends on your renters. I've had real estate and I've had renters, and I've had good experiences and bad experiences. And sometimes people just get tired of it. They get tired of being the landlord, whether it be a corporate landlord or residential. A lot of times people will get tired of it. And I have people that will approach me and they're like, I am done with this. I'm going to sell my real estate. Yeah, maybe it's not the most financial savvy choice. You know, maybe I should keep it for writing off my depreciation and for having the value of that real estate. But at the same time, I'm done managing. I want to vacation. I want to enjoy my life. I have create this cushion. I have create this wealth for enjoying it. And so I can't really enjoy it fully if I'm still working. And I really am working if it's not completely passive. So anyways, I'm going to show you some annuity options, okay? If you're looking for guaranteed income and you just don't want to have to worry about it and you want to make sure that it's passive and that it just drops in your bank account every single month without you having to think about it, then we're going to look at a consistent and safe way, because annuity companies, insurance companies are considered safe as far as options to choose from for retirement income. Now, everything has risk. And so you have to remember that a lot of these insurance companies, some of them have different ratings. You've got A+, you got A-, you got B++, and it's just hard to decide which one is the best one. So before you choose, do your research, look at the ratings, and also look at your state guarantee association limits, the coverage amounts, usually around $250 per state. Some are higher though. It just depends on your state. So you can check on that as well. But just remember that coverage covers the account value, okay? It does not cover the lifetime payments, because you might spend $500,000 on an annuity and get $2 million in payments, right? But they're not going to be on the hook for $2 million in payments, okay? If that company goes bankrupt, then of course they're just going to give you what is left in that account up to that insured amount. So again, it's very rare for these companies to fail because they are required to be extremely safe and have very high reserves, especially compared to a bank. And so when you're looking for safety, these are one of the safest options for guaranteeing lifetime income. It's like buying a life insurance policy. It's a contract, it's safe, it's guaranteed. If you die, it pays out a death benefit. With an annuity, it's just the opposite. It covers you against not living, living too long, right? Basically outliving your assets. And so some of us have that fear where, like, if we live to 100, are we going to still have enough money? Annuity contracts, they don't care how old you are, okay? They pay out until you die. So you live to 110, it'll keep paying. Okay, I'm going to show you exactly what this looks like. Look at my screen and you'll see that I have a couple who is based out of Texas, $300,000, and they're both 67. And they're going to take income in 5 years. So I just made this very simple. The payouts will be different if you take income earlier or later, and of course, different amounts that you put in. So, and it can vary state to state, but it's pretty consistent. So if you look at the payouts, for this particular couple, Corebridge is the highest. Corebridge is paying out $31,000 per year, guaranteed for the rest of their life. You got a lot of different other options down here, but if you want highest payout, and with a company that's been around for 100 years, it's a no-brainer. So if you pull up the detail, you'll be able to see exactly what the income looks like. $31,208 is going to pay out $900,000 by the time you're 95. If you live longer, it pays out more. Okay. And this is a joint payout, which means if one of you passes away, even if you're the contract owner, you own it because maybe it's your IRA, your spouse is going to inherit the IRA, even if the IRA has a zero balance. Okay, it still has the annuity contract inside of it. And since you select the joint, the $31,208 will continue to pay to your spouse for as long as they live. Okay, that's really important to know if you're looking for a longevity risk for both of you. And typically when you're married, I tell you, do a spousal payout and make sure it's a joint, okay? But with this, you deferred it for 5 years, allowing your benefit base, which determines the amount of income you get, to grow. And it grew to $427,500, and that was multiplied by 7.3% withdrawal rate, which gave you the $31,208. If you take it out earlier, you can, absolutely, and they show you the contractual amounts at those levels. So if you say, well, 4 years, it's like $29,000. If you 3 years deferred, then it's $26,732, and so on. So it's a nice way to know, hey, if I take this out earlier, here's what the income will be. If you take it out later, it's higher than that too. So if you're thinking about purchasing an annuity contract for lifetime income, and you're just thinking, I just want a safe, consistent way, but I also want a way where it's just passive, where I don't have to really manage it. The income's being dropped on my account and that's it. I don't have to worry about it. And if I die, it just keeps dropping in, like nothing changes. Like literally, I had one of my clients, their spouse died last year, and the insurance company actually told them, they notified them of their spouse's death before they could notify the insurance company of it, because they said, hey, your spouse passed away, and here is the spousal assumal form where you can accept ownership of the contract, which just becomes an inherited IRA, spousal IRA, and the annuity is still inside of it, still providing the income. It never stops. It's a wonderful thing when you're looking for some safety. So anyways, and it's consistent. So if you live till 95 or 105, it will continue to pay out to whoever is still living. So you die, your spouse is still living, it will continue to pay out. So that's the beautiful thing about guaranteed income. So anyways, hope this helps. I really appreciate you watching. If you find value in this video or in this channel, hopefully you had a chance to look through a lot of my videos. I've got a lot of videos out there that talk about guarantees, talk about annuities and how they work. If it provides value, make sure you like, subscribe, share. And if you want to book a call, there is a link below this video. It goes directly to my calendar. If you want to go to my website and check out annuities that are on the market right now, and you can look at everything, go to johnstevenson.com and you will be able to find that there as well. So I'm completely transparent. The commissions paid on these are all over the place. And so it's best for me just to show you everything that's available so that you can see for yourself what is the best payout instead of trusting your advisor to hopefully show you the right option when a lot of times, unfortunately, they don't. They will show you a good option, but maybe not the best, but that good option pays them a higher commission than maybe the best option for you. So that's unfortunate, but that is the reality of the business and in the world that we live in. So anyways, I hope that this has been helpful, and I hope that if you are looking for an annuity that you will feel comfortable reaching out. So otherwise, use my annuity calculators and do the research that you need for yourself. So thanks again, and we'll see you next time.